The US dollar rose for the third consecutive session, reinforced by mixed messaging coming out from the US Federal Reserve FOMC meeting yesterday, where the Fed kept interest rate unchanged for the third consecutive meeting. But however, we have three Federal Reserve official dissent not on the interest rate decision, but on the messaging of the FOMC monetary policy statement. The US stock market were mixed yesterday. However, the Nasdaq 100 continues to record positive gain led by the semiconductor stocks. In the after hours trading, the Nasdaq 100 E-mini futures managed to inch higher, followed by the S&P 500 E-mini futures, added by three mega cap technology stocks that posted ex-post earning results, share price positive, where Alphabet, Amazon, and as well as Microsoft managed to rose in the after hours trading session, and oil prices continues to remain firm above the $100 per barrel after US President Trump announced that he has rejected the fresh Iranian's proposal and vote to keep the Strait of Hormuz shut by the continuation of the US Navy blockage. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be the Thursday, the 30th of April, 2026. So as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. Just to make sure that the screen is good. All right, I think it should be fine. So now let us now kickstart with the key events slash data that has taken shape in the last 24 hours and as well as in today's early Asia session. All right, so let me flip over. Give me 1 second. All right, over here. So let's start with the situation or what you call it, the outcome of the FOMC meeting yesterday. All right, so over here. Okay, let me expand it so that you guys could have a better view. I think it should be fine. All right, yeah. So within market expectation, the Fed kept rates steady with the decision marked by the we call it unexpected situation was the hawkish descent over here. All right. So this hawkish descent is not descending about the rate path. All right. That means they did not descend about the Fed. We call it keeping rates on hold. They do not vote for a hike, but however, they descend on the language of the FOMC monetary policy statement. So there's these three official, Hamek, Kaskari, and Logan, descended against an easing bias in the statement. So in the statement, there was this implied messaging about easing bias over here. So still recall that the US Federal Reserve dot plot projection that was released in the previous meeting forecasted or projected at least one interest rate cut this year. All right. And we know that another FOMC officer will be Miran. Miran, he is the ex administration official who is kind of skewed towards US President Trump liking for easing bias on the Fed. So we call it a surprise. He continued to descend for a quarter point cut, interest rate cut over here. So net overall, at the press briefing, Powell reiterated that the committee is not thinking about rate hikes at the moment. All right. So he don't believe that the current situation arising up from the US-Iran war slash conflict will lead to a spiraling up on inflation expectation, prompting them for a skew towards interest rate hike this year, and is centered towards moving more of a neutral language in their statement. So it's something more like a wait and see approach over here. But what's interesting over here is that the Fed funds futures market doesn't really buy into Fed chair press conference stating that the committee is not thinking about rate hikes at the moment. Why? Because if you look at the CME Fed Watch tool right now, based on the price action trading behavior of the Fed funds futures traders, we could start to see that the current rate is 3.5% to the Fed funds rate is 3.5% to 3.75%. So very interestingly, if we were to look down the the last meeting of this year and as well as the first meeting of next year, there is a slight chance that market is now betting for a interest rate hike. So still recall that prior to the FOMC meeting yesterday, in the last meeting of this year, which is the December the 9th, there's still a slight chance, about 20% to 30%, 3 to 4 sessions ago, which I highlighted, that the Fed funds futures traders are looking for a cut. Right, but so this cut expectation has totally got erased, and right now there is a very small chance that they view that there could be a hike. Okay, so it doesn't seems to be aligned with what Fed Chair mentioned yesterday, stating that the committee members are not looking for a hike. And at the first meeting on the first meeting of next year, which is the January the 27th, 19.5%, which is 20% chance that the members are looking for a hike, and this probability gets increased right throughout 2027, right, for a potential hike back to 25 basis point. But what's very strange over here is that we start to see a big jump looking for a cut on the last meeting of 2027, which is on the December the 8th, 2027. The market participants in the Fed funds futures market suddenly skewed towards a 76% chance that the Fed may do a 25 basis point cut at that point in time. So what we start to see over here is that this is a kind of very erratic price trading behavior inferred from the latest price action from the various Fed funds futures contract over here. So based on this kind of what we call a switching of probability, it seems to me that even the Fed funds futures market is rather uncertain right now, and this kind of erratic trading behavior could actually swing across the pendulum on a much more frequent basis over here. So that causes the US dollar to jump as well, and the jump in the US dollar also be reinforced by a firmer oil prices, where later I'll share the oil chart. So if you look at the US dollar index for the third consecutive session, okay, since Tuesday, it has starts to inch higher, and right now it's actually testing the 50-day moving average and right below this key intermediate resistance level at 99.16. So the FX market has now also come to an inflection point as well. So today's meeting coming out from especially the ECB and the Bank of England in some way could produce a significant movement in the FX market. So it's either we have a pullback from here back down towards the near-term support area again at the 97.95, or we start to see a push up above 99.16 to head up towards this key major range resistance stop at 110 and 154, which has been in place since May last year, which is on the 29th of May, where the US dollar index continues to be trapped inside this complex sideways range. All right. But however, very interestingly, the higher oil prices and the stronger US dollar didn't actually create a negative feedback loop on the US stock market. So the US stock market was rather mixed yesterday. So we see the SPX almost unchanged, assisted by those semiconductor related stocks and some of the mega cap technology stocks due to their earnings release that was actually released earlier on this morning. And in fact, after the close of the US session yesterday, the Nasdaq 100 managed to outperform with a gain of 0.58%. And what's the one that is underperforming is the Dow Jones Industrial Average and the Russell 2000, both of them down by negative 0.6%. So we do not see a kind of a very put away that very drastic negative feedback loop on the US stock market. Still recall during the onset of the US Iran war, we see a higher US dollar. Then after that, and also with this swift upwards movement in oil prices that create a negative ripple effect on the US stock market as in some form or another. But this time around, it didn't create that much. So I reckon that one of the reasons they're able to cushion this US stock market is due to the earnings expectation and the earnings guidance slash AI optimism that is coming out from the US stock market reporting earnings reporting season that is going underway right now, that is providing some form of support to the US stock market. And in fact, if you look at the current situation right now as we are speaking in Asia session, 11 a.m. Singapore time, we have the S&P 500 up by 0.17%, which is the E-mini futures that is trading right now in Globex during the Asia session at 11 a.m. right now as we are speaking. The Nasdaq 100 E-mini futures outperform with 0.42% or 0.43%. And one of the reasons why the E-mini futures of both the S&P and the Nasdaq 100 managed to post marginal gains in today's Asia session, all thanks to the positive share price reaction or the after hours share price reaction of the four mega cap technology stocks that have reported their Q1 earnings. So all four of them beat the numbers. So we see based on the guidance that is being portrayed by the senior management, Alphabet, which is the parent company of Google, is the one that lead the pack with a stunning gain of 7%. Right, 7% in the after hours trading session. And Amazon, second in the pack, with a gain of extension of 2.74%. So during the normal hours, they are up by 1.29%. After hours, they gain further by 2.74%. Microsoft also gained marginally, not that much, only up 0.34% in the after hours trading. And the one that plummeted the most was Meta, the parent company of Facebook, that plummeted tremendously of a negative 7% in the after hours trading. So this plunge in Meta platforms was discomfort by the traders because Meta platforms during the press conference rose popular way that they increased tremendously their AI infrastructure spending for this year. So basically, if you want to take a look at this, is the press report coming out from Bloomberg. Okay, stating over here. So basically, Alphabet the AI arena over here. So because of market participants' fear, where Meta platform announced that they will increase their full year AI capital expenditure, and currently its flagship consumer AI application has yet to actually bring in the positive cash inflow for the company. So that just explain why Meta shares lagged in the after hours trading session and underperformed with a loss of negative 7%. So with three of the mega cap technology stocks bucking up the trend, we do not see a negative feedback loop on the E-mini futures right now as we're speaking. Instead, both of them are gaining, holding above their key support level, which I'm going to share with you guys later on. And this is the particular news flow coming out from the US slash war conflict that is now entering into its ninth week. All right. So Trump said that he reject the Iran's Hormuz offer. That means you still recall that at the start of this week, the Iran side draft out a new proposal to actually hope to we call it schedule a second peace talk resolution, peace resolution talk between both sides. But with Trump rejecting it, this second round of peace talk will be totally kind of evaporated right now as both sides go down back to the drawing boards again to play this game of poker. So Trump, he also maintains the blockage that is still being, we call it enforced by U.S. Navy, hoping to choke off Iranians' economic, we call it benefits from preventing their Iranian or oil tanker from getting out of the Strait of Hormuz, and so preventing Iran from getting any revenue from this aspect of the things. Right. So with this Strait of Hormuz continues to remain blocked or virtually shut down, that actually spoke fear in the oil market, despite the fact that we have one of the OPEC members, the third largest member, UAE, leaving OPEC. And with UAE leaving OPEC, in the long run, they could actually produce within their own circumstances. That means producing more than what OPEC members dictate on their individual members. So that in the very long run could increase supply in the oil market, but market is totally ignoring that particular aspect of the things, but it choose to focus on the short-term situation between US and Iran, and also the Strait of Hormuz blockage that continues for what now is the what 8 week or so, 8 week plus or so, that potentially oil prices could remain firm in the near term at $100 per barrel at least. All right, so that pretty much sum up the situation over here in the US/Iran war and conflict. And right now, there's one particular economic data I want to share coming out from the Asia session to the key tier one China data. We have the state compiled MBS manufacturing PMI that is out earlier on. So this came in within expectation. I would say it doesn't really change much. So what market is expecting 50.1, it came in at 50.3. So almost the same, slightly below the previous print of March print of 50.4. So still showing growth, but the growth is not improving on the upside. All right, so it's more like a very tepid growth for the manufacturing sector. And the non-manufacturing sector, which is the services PMI, compiled by the State Statistical Board (NPS), contracted. All right, so they contracted to 49.4 from 50.1. All right, market is expecting 49.9, so it came in slightly below expectation. So it's more like a mixed bag of showing. But what's interesting is the rating dot manufacturing PMI. So that's also for China. Rating dot previously was Caixin, so they changed the compiler. So this rating dot is more of a private organization, not the state-owned MBS, that comprises SME. All right, whilst the MBS one comprises only those large company, and which is including those state-owned firm, but doesn't really have the SME. So with the SME coming into place, the rating dot manufacturing PMI for April as well for China, it's much better in terms of the rate of expansion. So they grew to 52.2 from 50.8 previously in March, and above 51%, above 51 consensus expectation. So net overall, despite the ongoing so-called US China tariff that is still intact, and also this ongoing US Iranian war that causes oil prices to remain firm. And we know that China is dependent on oil to run the economy in a way or so. That hasn't really pre, hasn't really triggered economic fall off in China based on this tier one leading economic data that is out today's session. All right. And with that, if you look at the current situation on the Asia Pacific stock market, not much of a negative sell-off, despite the FOMC meeting that produced three descendant that go against the easing bias implied messaging in the FOMC monetary policy statement. We still see a bit of recovery on the Nikkei 225. So yes, the Nikkei 225 is down right now in the cash market, down by negative 1%. But if you look at the futures market, which take into account of the price action yesterday, which it fell during the US session, now managed to inch up slightly higher, a rebound, positive 0.5% as we are speaking. And also due to the mixed message, mixed data coming out from the Tier 1 China manufacturing PMI, services PMI, and as well as the privately compiled rating dot manufacturing PMI, the Hang Seng actually gave up yesterday gains, down by negative 1.3%. And if you look at the China A shares market, also down slightly, negative 0.18%, which is the broader base CSI 300. The narrower China A50 is down by almost the same magnitude, negative 0.23%. And if you go down the line over here, we see also mixed bag performance. All right, over here, the ASX 200 is down by negative 0.19%. The Kospi 200 is down by negative 0.44%, negative 0.4%, trading near the session low. But however, the TaiX, which is the Taiwan benchmark stock index, which is heavily weighted to semiconductor, up 0.34%. That is also in line with the movement of the performance of the Nasdaq 100, which is positive right now, the E-mini futures. So that has a direct correlation, because given that the TaiX is also part of this AI optimism play, given that they are heavily weighted towards the semiconductors. Our STI managed to gain by 0.62%, thanks to DBS share price performance after the release of their earnings result this morning, which they are up to a 2-month high by 4% or so. Right, so net overall, a kind of a mixed performance in the Asia benchmark stock indices. As we are speaking right now, there is no clear drastic risk-off feedback loop that's being seen, despite the ongoing US-Iran war/conflict that is showing no signs of any peace talk resolution to end this conflict, and with the Strait of Hormuz that is continues to remain virtually shut by the US Navy blockage, and as well as the Iranian side, preventing other oil tankers registered from unfriendly nation to transit through the Strait of Hormuz. All right, so with that, that sum up the first segment of the daily dose. So now let me move on to the second segment over here. So the second segment, I will cover various key, we call it, put away that key asset classes or key cross asset classes that is coming very close to certain technical levels and or broken various key technical levels. So I will not cover the full suite of it. All right. So with that, let me share my screen over here. Okay, let me pardon me, let me expand my screen instead, not share my screen. All right, so hopefully you guys get a better view of the charts. Okay, just to make sure that everything is good. Okay, excellent. So let us start with the all important oil market, which is the West Texas crude oil. So the West Texas crude oil, if you look at the daily time frame, very clearly we have a very strong bullish Marabuzu candlestick yesterday. So we have 3 days of price section moving higher with bullish candlestick movement on Wednesday, closing above the 20-day moving average. So right now, there's very high chance that it may continue this near-term bullish momentum to retest the sideways range top that has been in play since 9th of March. All right, so price action is down during this kind of sideways range. Okay, so with that, yesterday we do have a bullish. Okay, let me explain it. Yesterday we do have a bullish bias on the West Texas oil on the intraday basis, as expressed by the positive technical configuration that is seen on a 1-hour chart as well. So the 1-hour chart right now is now breaking above our first resistance level that we highlighted, which is the gap down that was formed on Wednesday of the 8th of April, which is 110.87. So with this positive showing in the West Texas crude oil, yes, there will be a bit of pullback coming to play, given that the hourly RSI is now at the overbought level, but there is no clear bearish divergence. All right, that has been formed. Okay, so no bearish divergence yet. So with that, the short-term intraday bullish momentum may resume after a minor pullback. So as long as this minor pullback didn't surpass above, or this will not, as long as this minor pullback didn't surpass, as long as this minor pullback don't surpass below our adjusted pivotal support zone for today, which is my Titan short-term pivotal support zone at 103.77 and 100.2, which is confluence with the 20-day moving average, there's a high chance that the West Texas crude oil may retest that range top that has been formed since early March this year, which is 116.56/119.54, which is exactly the high of 7th of April, breaking above 100.94 over here, the high of 9th of March, pardon me, breaking above 119.54, okay, breaking above 119.54, potentially seek out a further push up to test the previous close to about 3.5 coming to 4-year high previously, 8/14 of June 2022 high. So this high was formed during the aftermath of the Russia invasion into Ukraine at the point in time in the first quarter of 2022. So that's 124.40. All right. However, if price action suddenly does a bearish reversal below 102, then this direct bullish bias on the West Texas oil will be eradicated to see a minor corrective pullback again back towards 95.10 followed by 90.50, which is now confluence with the rising 50-day moving average. So that's for West Texas oil, still maintaining a bullish bias with a adjusted short-term pivotal support upwards. All right, so now let me touch on the FX market, starting with the euro dollar. All right, so the euro dollar slide down yesterday and is now hovering at the 50-day moving average, which is at 116.50, slightly above our medium-term pivotal support at 116.20. And what we could see over here is that the euro dollar hourly RSI has started to shape up a bullish divergence. All right. So with this bullish divergence in play, there could be a recovery taking shape in the euro dollar, but that also all depends on the key risk event that is taking shape later. Later, I'll share with you guys, which is the ECB monetary policy meeting. All right. So first resistance level to watch will be at 116.22. So only a clearance above 116.22. That means this is something like upside trigger level will increase the odds of a bullish reversal on the euro dollar on the intraday basis to seek out the next resistance level at 11760, pardon me, 11760 slash 11790. All right, over here. However, if you start to see a bearish breakdown below 11622, this bullish reversal scenario will be eradicated and see a further slide exposing the next near-term support level at 115.75 and even 115.10, which is the minor swing low of 2nd of April and 6th of April. So two key levels to watch for today as we see some form of positive technical configuration that may support a potential bullish reversal in the euro dollar, which is a bullish divergence on the hourly RSI, hovering right above the 50-day moving average at 116.50, which is slightly above our medium-term pivotal support at 116.20. Upside trigger level to increase the odds of this minor bullish reversal will be at 117.22. Next will be the sterling dollar. So sterling dollar is much better compared to the euro dollar as it still managed to trade above the 20, the 200 and the 50-day moving average. And right now is exactly at where we are at the start of the week. So at the start of the week over here, it was on Tuesday at around 134.50, managed to bounce before retesting again. And you realize that it's formed a similar low, same low, followed by almost the same low on last Friday. So this is indeed a very key pivotal support, the short term, 134.50, where the bulls managed to hold some kind of fought at this level or defended this level, which also confluence with a rising 20-day moving average, reinforcing this key short-term pivotal technical support. And what's interesting now is that after yesterday's price action for a retest of it, managed to survive during the release of the FOMC monetary policy statement, where we see 3 descent. The RSI also managed to shape a bullish divergence. All right. So with this bullish divergence coming into play, and also with another risk event that is coming out later, which is the Bank of England decision, but market will be focusing on the messaging over here because market will not expect the BOE to introduce any changes to its cash policy rate. So that I'll share with you guys later. Upside trigger level will be at 135.45 over here that got rejected on Tuesday early Asia session. So breaking above 135.45 may increase the odds for it to retest the minor swing high area or the minor range top that has been in place since 14th of April at 135.87 slash 136.05. However, a bearish breakdown below 134.50 that would totally eradicate the recovery scenario and see a further push down towards the area of the 200-day and the 50-day moving average at 34.15. Breaking below 34.15 may expose further weakness towards 133.80 followed by 133.40, which is the medium-term pivotal support level. All right, so that's for the sterling dollar. Watching these two levels closely, the pivotal support level at 134.50, the upside trigger at 135.45 on the sterling dollar. Next will be the dollar yen. So the dollar yen I'll feature why because the dollar yen up, but the push up is stalling at this previous BOJ intervention level that has taken shape in the I think in 2022 over here. So if you go to the daily time frame chart, this is where BOJ previously intervened in 2 years ago. Pardon me, it's not 2022. My apologies. It's at 2024. All right, at this point in time where they intervened. All right. So there is also some form of intervention during this period as well over here. All right, July 2024. So that was about 2 years back. So with this kind of scenario, and as well as still recall that the finance ministry is also getting pretty uneasy about the weakness of the yen. So what's interesting over here is that we now start to see some form of technical deterioration in the momentum. We call it factor that is showing up in the dollar yen 1 hour chart. So price action push a higher high. And what we could see now is that it starts to form a bearish divergence as well by showing a similar high over here. Okay, as at this point in time. And if you were to look at the RSI by linking up the previous higher low, okay, over here is broken below a support or broken below its support. All right, indicating that there could be some form of mild bearish reversal at this short-term pivotal resistance zone that we highlighted previously, 160.23/45 over here. All right, which is the high of 30th of March 2000 minus swing high. So with that, I'll still maintain a bearish bias, a mild one, with adjusted support level to watch right now. First support level 159.85 that got taken out yesterday after the FOMC monetary policy statement release, and breaking below 159.85 will increase the odds of this mild bearish reversal scenario to revisit the swing low of Tuesday, this Tuesday at 159.05. Only breaking below 19.05 may expose the next near-term support at 158.60, which confluence with the rising 50-day moving average. Right. So watching closely these two key levels in first step, the short-term pivotal resistance zone, testing it, but showing a bearish momentum reading based on the hourly RSI, and also fear of actual intervention coming out from Japanese authorities, because at this level previously 2 years ago they intervened in the FX market with instructing the Bank of Japan to buy back the yen, sell off the dollar. All right. So next support level, which is something like a downside trigger level, 159.85. Right. So that's for the dollar yen. Now, next up will be the major stock indices. Some of them on the share for sure will be the US market. Right. So let me start with the major US stock indices. Starting with the US stock market first. So the US stock market, the US Wall Street 30 continues to underperform. It continues to trade in this kind of corrective movement. This corrective movement now is testing the short-term pivotal support level at 48,645. So while it tested this 48,645 right now, it started to show a bullish divergence, all right, on the Dow Jones Industrial Average. So this bullish divergence, we'll continue to watch closely, this 48,645, still maintaining this mild bullish bias on the US Wall Street 30, represent the Dow Jones Industrial Average. Represent the Dow Jones Industrial Average, pardon me, but I have a resistance to watch, a very important one on the intraday basis, 49,073, which was yesterday's bearish breakdown, breaking below the swing low of 23rd of April and 27th of April. So let me put it in writing for you guys. 49,073. Right. So breaking above 49,073 may see a push up to test this minor range top that has been in play since 17th of April and 21st of April at 49,715, 49,835. However, a bearish breakdown and an hourly close below 48,645 that would invalidate the mild bullish reversal scenario to retest the range top and see a further corrective decline extension towards 48,327 and even 47,895, which is the 50-day moving average. All right, over here. Next, the SPX. So SPX managed to find support at our first intermediate support that we highlighted earlier at 7,120, where it managed to bounce off it during today's Asia session. Can't clear above the first resistance yet at 7,210. So unless we have a clearance above 7,210, then I will tighten the pivotal support, which is 7,060 to 7,120. However, for it to seek out the next intermediate resistance level at 7,250 slash 7,268. Above 7,268 may see a probe at the next intermediate resistance zone, 7,358, 7,373, which is a Fibo extension cluster level. And that is also the upper limit of this bullish ascending channel drawn from the low of 2nd of April. However, a bearish breakdown and hourly close below 7,060 that will invalidate the bullish push up and see another round of choppy minor corrective decline to test 7,020, which is the former all-time high. Below it, seek out the rising 20-day moving average. We also confluence with the lower limit of this minor ascending channel, 6,960. All right, so still maintaining that bullish bias on the SPX, watching these two key levels, 7,210 on the upside. Key short-term pivotal support remains the same, 7,060. Next will be the outperforming Nasdaq 100 over here. So the Nasdaq 100 managed to clear during the Asia session above the former all-time high of 27th of April at 27,380, and right now it's showing some form of pullback. All right, over here. So with this RSI continues to show a series of higher low. All right, we will now tighten my pivotal support level from 26,760 to yesterday's FOMC session intraday low. We also confluence with the recovery area on 28th of April, the former minor swing high of 23rd of April and 24th of April, 26,987. So I will do a slight adjustment to my short-term pivotal support, 26,987 over here. Next resistance level to watch will be 27,645, which is a Fibo extension level. Above 27,647, not 5, above 27,647, potentially seek out the next intermediate resistance at 27,934 slash 27,994, which is a Fibo extension cluster level, and also coming towards the upper limit of the ascending channel that has been in place since 31st of March 2026 low. However, a bearish breakdown below 26,987 will see a choppy drift down to retest 26,760. 26,760 is in fact the key minor swing low of 24th of April, which is last Friday. Only breaking below 26,760 will trigger off a minor corrective decline sequence towards 26,480. Maximum, if this level can't hold, it may see further weakness to test the former all-time high area at 26,288 slash 26,142, which is also confluence with the rising 20-day moving average. So that's for the Nasdaq 100. And lastly, one more important asset class I want to share will be Gold XAU slash USD. So Gold continues its descent over here. So yesterday we flipped to a bearish bias. So this bearish bias hit our first support zone at 4,524, 4,486. So without any clear sign of recovery, we will continue to maintain our bearish stance in short term for Gold XAU slash USD, and breaking below 4,486 may expose the next two support level at 4,415, which is the congestion area of 27th of March and 30th of March. Breaking below it will seek out 4,319, which is the minor swing low of 24th of March, also coming very close to the 200-day moving average. So if we start to see an hourly close below 4,486 over here, then I will tighten the short-term pivotal resistance zone, which is to maintain my ongoing bearish bias, 4,700, 4,645, 4,700 to today's Asia session high at 4,585. All right. So for now, the level still remains the same. However, if price action don't move down as intended and start to shape a mild bullish reversal, breaking above the 4,700 level, we're also breaking above the so-called 20-day moving average, that will start to see a potential squeeze up to retest the range resistance 4,775 in first step, followed by the key range resistance which has been in play since 8th of April, and so confluence with the 50-day moving average that will be at 4,860, 4,900. All right, so that's pretty much sum up the key asset classes intraday technical levels, some of the important ones that I'd like to share with you guys due to their interesting technical configuration and key levels that are actually resting on it or breaking on it, or about to break. All right. So with that, now let me touch on the third segment over here, which is the last segment, which is what are the key data to look out for today. So key data / event to look out for today will be at the so-called later on at 1 p.m. Singapore time. We have consumer confidence up from Japan for April. So market is expecting almost the same rate as the previous reading of March, 33.3, expectation at 33.1. Unless it starts to move down drastically, then potentially it could have an impact on the dollar yen, or if it starts to increase very dramatically, let's say at 34 or 35, that could also see a dollar yen setback as well. All right, so that will be at 1 p.m. Singapore time. Then thereafter, we have the ECB. All right, so before ECB released their monetary policy statement and the press conference, we have some tier one data to look at on the Eurozone. So at 5 p.m., we have the Eurozone aggregated flash GDP growth rate from the Q1 over here. So market is expecting a slight dip from the previous Q4 quarter of last year, 0.9% year on year from 1.2% in Q4 last year. And we also have the core inflation rate, the aggregated one from Eurozone for the month of April. Market is expecting the same pace at 2.3%. All right. Then thereafter, we will have 7 p.m. We have the Bank of England interest rate decision. So market is not expecting a change to 3.75%, the official so-called cash policy rate. So market will be focusing on the monetary policy report, the statement, whether will it be a hawkish hold. All right, so if we start to be a hawkish hold with hawkish vibes coming out from the members, stating they are pretty much concerned about higher oil prices or inflationary trend in UK, that could provide some form of support on the sterling dollar. And next up at 8:15 p.m. Singapore time, we'll have the ECB. So ECB also market is expecting no change at 2% for the depot rate, which is the official policy rate. But market is now expecting ECB to hike in June, based on some of the Bloomberg poll are showing, before reversing only in 2027. So market is now having a hawkish bias in ECB based on their monetary policy official guidances that has been portrayed prior to today's meeting. So market will be pretty much focused on the ECB, they call it the ECB press conference thereafter at 8:45 p.m., where market will be sieving out the speech from ECB President Lagarde, whether ECB remains tilted to a hawkish hold. So if that turns out to be true, then that could potentially support the euro dollar going forward, at least in the near term. And next data to look out for will also be impacting the FX market at the same time, will be 8:30 p.m. All right. So 8:30 p.m. we have the favorite Fed inflation gauge metrics that the officials tends to monitor will be the PCE price index. So for the core PCE price index year on year for March, market is expecting a slight uptick to 3.2% from 3%. So that will be at 8:30 p.m. Singapore time. All right. So that pretty much sum up on the data for today. So on early Asia session tomorrow, so tomorrow it will be a public holiday in Singapore, but however, the Japan market is still open and the US market also is still open, right? So on early Asia session tomorrow at 7:30 a.m., we have the leading Tokyo core CPI data that is out. So market is expecting a slight uptick to 1.8% year on year from 1.7% previously in March. And also, if you exclude off the energy price, because this only exclude energy, so the core one, Tokyo core CPI exclude food and energy. So this is the metrics where BOJ is monitoring. Market is expecting not market, the forecast produced by Trading Economics is expecting a same stable pace at 2.3% year on year from the previous March print of 2.3% as well. So as long as hover above 2.3%, we're still above the long-term BOJ target. So that could potentially keep the hawkish voices of BOJ at play. All right. So they continue to put in the last meeting this week. The monetary policy setup was to still conveying a message of gradual interest rate hike in Japan. All right, over here. So that will be at 7:30 a.m. Singapore time. And with that, we also have the earnings calendar to chew on as well in the US session that could provide some form of movement on the intraday basis for the US stock market. So today, okay, let me adjust the calendar to a 3-star one. Right, give me a couple of minutes to put it up for you guys. All right, so we have a couple of earnings to take a look at. Not only Apple, so Apple for sure will influence the Nasdaq 100 and the S&P 500. So this one will come in at the close of the after the close of the US session today, which is on after 4 a.m. Singapore time, 1st of May on the Friday. So Apple will report its Q1 earnings. Then we have before the start of the US session, we have also key financial stock, which is Mastercard, will also report their earnings, but that will be before the US session, and as well as the infrastructure, we call it play juggernaut, Caterpillar, which is also part of this AI infrastructure spending play because Caterpillar equipment is also pretty much pivotal to this AI infrastructure spending bonanza that is being portrayed by those mega cap technology stocks. Yesterday's press conference. So Caterpillar will also be closely watched over here. So their earnings number will be out before the start of the US session today. All right. So a couple of things to look at on the earnings front in the US as well that could influence the intraday movement of those benchmark US stock indices. So with that, that pretty much sum up today's daily dose of market insights. A slightly longer one due to the FOMC meeting yesterday that has an impact on the current intraday movement of those cross asset classes that I shared with guys earlier. So I wish you guys a restful long weekend, given that tomorrow is a public holiday in Singapore, hence no daily dose, and daily dose will resume again on next Monday, and we shall speak that. Thank you.